everything is digitized, higher are the chances of cyber frauds or various risks, which grow as and when finances near digitization. However, the financial institutions have their own ways of coping up with any fraud threats that may circle around the finances they're responsible for. So let us learn and discover and understand more ideas about how the, the institutions are coping up with any fraud threats that may circle around the finances they're responsible for. Let us learn more about it on the topic of how banks prepare for evolving fraud threats through a panel discussion. I'd like to call on stage our moderator, Mr. Vikram Babbar, partner and lead financial services at Forensic and Integrity Services. So, Mr. Babbar, if I can request you to come on stage. FinCrime Compliance Lead AML CoE EY India LLP. And joining him on stage are our respected set of speakers of the panel, beginning with Mr. Sean Ryan, General Manager APAC, Feedzai, Mr. Manish Agrawal, Executive Vice President and Head Credit Intelligence and Control, HDFC Bank, and Mr. Ganesh, Jatadharan, Principal Officer and Head Anti-Money Laundering, Yes Bank. So let's fasten our seatbelts and begin this remarkable panel discussion. Over to all of you.
So do we need to wear it? Do we need to wear this? Yeah. Okay, thank you so much.
Hello, hello. Hello.
Is it audible? I think it's audible.
Is it audible?
Just speak now.
Should be. Yeah. I think people can hear. Great. Thanks. Should we start? Okay. Great. Thank you and welcome to all the panelists. I think I'm quite honored and privileged to be here at the Global FinTech Fest 2022 and honored because I have a great set of panel with me today. I think the topic also is extremely relevant if you look at the way the last 2 years have gone by and even before that. The way we have looked at the pandemic, there have been significant changes in the landscape of the way the banking sector has gone through. And if we look at the way the risk landscape has gone through changes, that's even been more significant. 2-3 key changes which I have seen, and I'm sure everyone would agree to me, is the kind of digital transformation we've looked at from a financial services sector, sourcing of customers, customer experience, monitoring of customers, transactions, significantly being done through the digital modes now. So that is one key change that has come in significantly in the last 2 years. Data, I think that's another big change in the way we are now accessing information, gathering information. That has undergone a significant change, and the information is now being used from not even on perspective of how we need to interact with the customers from a banking perspective, also monitor the customers in that sense. And looking at the digital footprints, digital data availability, the kind of fraud and financial crime threats that have really come in, that also has undergone significant changes. We've seen, I think I was reading some statistics around this. In the first 6 months of 2022, we've seen more incidents on cyber than we saw in the entire couple of years of 2020 and 2021. So you can imagine the way the landscape is really moving. So I think with that background, maybe Manish, I would first come to you. Okay. You are on the hot seat when it comes to one of the largest private sector banks of the country. So, we spoke about digital transformation. We're talking about how it has accelerated only. COVID has only accelerated all that, the pandemic. But like we said, there are threats around frauds. There are vulnerabilities that have also come up to the forefront. We've seen a lot of incidents that have been reported. How, as a bank, you're considering the fraud mitigants, specifically around digital channels, and especially when we're looking at the kind of volumes that are happening today from a customer standpoint. It's tremendous, enormous. How do you look at fraud mitigants when you see such a kind of voluminous transactions happening, your customers interacting on a daily basis, cross-border, all of that? How do you see mitigants around fraud?
So,
yeah. Please go ahead.
So thanks, Vikram. Before we start, thank you everybody for joining in here. And it's a superb question, but I want to put some perspective, you know, before we come to the real question. Okay. So if you see that COVID, in a way, has provided us or given us a platform or an opportunity where we have preponed lot many things. Okay. If you see from an Indian perspective, probably 6-7 years back or 6 years back, not even completed 6 years, when we had the demonetization, we remember that what a long queue of the cash withdrawals that we had in the country. Okay. We went through the entire pandemic. Okay. But that situation did not occur. Okay. We did not see that people didn't have the money, because by that time, and I think we had learned the lesson and we had understood it, that the digital, and if I can state in a Hindi, in a very very simple word, कि सारी कायनात लगी हुई थी डिजिटल दुनिया बनाने में. Okay. And this has been the mantra from the government, the regulator, and they have pushed it like anything, while the lot of fintechs have added. Okay. And specifically, if you see today, if you talk the digital transaction, today in India, the 80%, and I'm talking from the financial transactions perspective, there is an entire world other than the financial transaction which has moved to a digital platform. So, but if I have to restrict myself to the digital transactions which are from a financial world perspective, so 70-80% is being contributed by UPI. Okay, and NPCI is the main sponsor here. So you can see that they have created a platform, and it is such a simple and secured platform. And I think this is one thing. So while you must have read the numbers about the, last 6 months, the count of frauds would have increased, etc., etc., you also have to see that the kind of transactions which are happening today. Okay. If I'm not wrong, the last one that UPI numbers which were published were more than 6.5 billion transactions in terms of account.
Yes.
Okay. Having said that, so while we state that, the transactions also have gone up, so the frauds, but we can't say every single transaction where the customer is defrauded, it reduces the confidence level in the system. So it is equally important that we make it more secure. Now the question comes that where is the problem? So at least from an Indian perspective, we can see that the government and the regulator have been very, very clear. They have worked on the simplicity, they have worked on the speed without compromising the security. So if you see entire architecture of a payment ecosystem in India, okay, you take it from the cards, whether it's a debit card, prepaid card, then your kind of transaction, whether it's an ATM transaction or it's a POS transaction or it's an UPI transaction, everything is today secured through a second factor authentication, which most of the Western world, if you see, they are still fighting whether they have to bring in the second factor or not. Not only that, you see the point of sale or the point of withdrawal, which is an ATM machine or the POS machine, they have changed. So now you have got the chip enabled. Even the cards have converted into a chip-based cards. So a lot of security have been brought in. And that is the reason. It is simply like saying, why do you have a brake in the car? Why do you have a brake in the car?
Yeah, it's to really drive faster.
Yes,
Exactly.
so it has to drive faster. If you don't have a brake in the car, then you can't drive faster. I think these are the security features which have come in. They are helping us to drive faster. So now coming on to, if you talk about the frauds in terms of an increase in frauds, you will see that it is not any vulnerability in the system. What is getting hacked is the mind of people and the social engineering thing, and that is where the lots of frauds are happening. We don't have any scenario, at least touch wood if I can say, where any ecosystem breakout has happened. And even if you see that lot of data leakage that happened across the world, India has not been impacted because we had a strong two-factor authentication in place. Okay, so today the need that we have is to ensure that people are made aware about these social engineering techniques. I'm sure you would have been following the newspaper in last 7-10 days. You will find, okay, some large corporates, they have been defrauded. Is it a system vulnerability? Answer is no.
Right.
So Yeah.
No, so I think very relevant points, and I was just trying to look at what are the takeaways from the conversation you just made, Manish. So I think clearly one thing is very important. When you talk about frauds and you talk about financial crime threats, it definitely impacts confidence, customer confidence. It impacts regulatory confidence. It impacts the entire organization as a whole. That means this is a very serious, there's a very serious implication when it comes to financial institutions like banks around these topics. But at the same time, when we're looking at the transaction volumes and looking at the way digitization has really gone through, you're saying that we're also looking at a lot of more security features as a country. We've really gone through that, which I would definitely tend to agree. And but having said that, I think there still are cases where incidents have happened. But I think what you're really telling is, and the root cause is a lot to do with awareness.
Lot to do with an awareness. And if you see today, you know, the regulator is so clear that whenever you have to get into a payment ecospace, whether you're a smallest player or you're a largest player, okay, there are criterias. There are specific circulars and advisories are in place which are mandatory. They are not obligatory in nature. That has ensured that the ecosystem is secured.
Absolutely. Manish, thanks for sharing those thoughts. Uh, but maybe I would like to take a cue from that conversation and maybe move to you, Sean. Because I think when we talk about frauds, we talk about threats, we also talk about how do we look at proactive assessments? How do you look at analytics in a big way? How do we look at behavioral analytics? And I'm hearing this term quite a bit now in different meetings. As a fraud practitioner myself, when I meet banks and I understand the way they are looking at monitoring of frauds, they talk a lot about how behavioral analytics now coming into play as compared to pure data analytics. I think there's a combination of things that are now coming into play. Uh, how do you look at the way transaction analysis, behavioral analysis now can be used more powerfully by the banks in really identifying the risk of fraud proactively? I think that is something which we would like to hear.
So, thanks everybody. It's absolutely great to be here. Sean, I love the word awareness. I had a complete lack of awareness. I thought I was coming to a silent disco, and arrived up and I found myself at the stage here. So, complete lack of awareness here. So, look, no, but in all sincerity, Manish touched on a lot of points here. When we're talking about fraud, we actually need to be talking about customer. At everything we do, the customer's at the core. And when we're sitting down to understand how we can better protect customers, it needs to start first with what's the experience we want our customers to go through. Digital channels, digital transformation has gone to an exponential growth level due to the pandemic. Not just in here in India, but it's exploding right across Asia Pacific, and it's a global trend. And what we're also seeing, the knock-on effect of that digital transformation, is that there's a lack of awareness of the impact on customers. There's been a focus on just pushing a product with minimal awareness of what's the impact to the customer, because people are trying to push through customer experience with minimal friction, which I'm a complete advocate for. But what's really important is to have the awareness of what's the true behavior associated with these customer interactions. So traditionally, most fraud systems were purely after the event. They were a case of looking at an alert, there was a detection, an alert was kicked off. And that was on the basis of having very, very minimal information of understanding who that customer is. It was the payment information and a little bit of customer demographic. Now what we're seeing, this is a global trend, and this is something that is actually quite simple. I lost myself there for a minute. Actually quite simple. If we're able to understand all of the information associated with a customer, from the minute they're on board, right the way through to downloading the application, having the product, and actually have financial and non-financial events passing through that application or that digital channel. If we're able to monitor all of that financial and non-financial information in one place, have a true 360-degree view of that customer, we can actually monitor the behavior and know what good looks like. Rather than start focusing in on the knock-on effect of where fraud actually happens, if we focus on what real good looks like, we now have a view of, Sean, every Friday, my salary comes in, I make payments, I pay my utility provider, I send some money to my son, he's in college, constantly looking for money from me. It's every Friday, just before he's going out for the weekend, he's looking for money again. People know that this is a consistent positive behavior. So if we focus on that, using all the information that's available right from behavioral biometrics at the start of the journey, which is core around digital trust, and again, trust is key here, right away through to all of the events that's happening, bring all of that together, use advanced data science capabilities. We now have a true view of what the true behavior of my transaction, of my experience with your bank, with your financial institution, with your tech. Then I'm able to say, okay, now I can manage what's happening. One of the big challenges is people are still running their functions in a very, very siloed fashion. There's a fraud team focusing on a digital channel. There's a fraud team focusing on a card. There's a fraud team focusing on payments. And even worse again, we have AML, financial crime functions, dysfunctional, silos, and away from the organization. I've worked in organizations where I've seen people, organized crime, defrauding my organization and washing that money back through my same organization.
Very true.
What's the challenge with scams? Everywhere it's scams at the forefront of everything. It's exploding. What's directly linked to scams is money mules. Now, if I was to turn around to the fraud department and say, how are you tackling money rooms? They say, sorry, Sean, that's not my responsibility. That's the compliance team's responsibility. So what we need to do as an institution, as an organization, as practitioners, is we need to start thinking holistically about customer risk, about fraud prevention, about sanction screening, about AML transaction monitoring, about the customer.
No, absolutely, Sean. I think very, I can say, good takeaways. And I would just like to summarize some of them for the audience as well. I think the first thing that you mentioned is clearly the idea or the way forward for looking at frauds is proactive assessment. Right? It's about understanding the different customer touch points in the bank and having a 360-degree view. And I think you very rightly identified that in many ways there is monitoring happening, and there is no question about that from an India standpoint. Like Manish also said, there's monitoring happening, but yes, there is a monitoring happening for cards separately. There's a monitoring happening for AML separately. There's compliance. There's a monitoring happening for digital channels as such. And do we really get one platform? Do we get one view of the customer behavior, like you rightly said? How do we look at the behavior across? And I think that is something which is now going to move in. And I see again, the way I have been interacting with many banks, even globally. I think I'm seeing that unified approach now being discussed and spoken, and how that is being and how that is coming in from a perspective of one financial crime compliance unit, where you can get all of this to come together.
So just on that, a few years ago, we tried to do this about 10, 15 years ago, and we couldn't because the technology wasn't able to do so. I remember sitting down. I've been a practitioner more than I've been on this side of the fence as a partner. I've been sitting down saying, Sean, what information do I want? How many years information I want? I said, I want all the information that you possibly have. And my IT team says, sorry, I can't afford that. You've got 1 year of Teradata licenses, and that's about it. We can't manage the volumes. I remember doing business in mainland China, and with the same thing, it says, all information is shown, the volumes of information, we just can't do it. That's not true now. Technology is not a constraint anymore. This is actually really, really simple. The only constraint that's going on is actually organizational change, organizational behavior, and bringing people together. That's the only challenge. The technology can do this, everybody. Yeah. It's here. There's no excuses.
Yeah. No, thanks for sharing your thoughts, Sean. I do agree, and I'll definitely come back on that change part, and I'll come back on that again. But I think that's an interesting step for me to move on to Ganesh. I think, Ganesh, you again, handling heading money laundering compliance for one of the largest banks again in the country. And I think the very interesting thoughts that came in from Sean as well. We look at money laundering compliance very separately or differently, when it comes to banks in India. Obviously, the idea is to look at suspicious transactions. But in many ways today, when we are looking at large fraud cases, I'm also seeing a lot of those fraud cases being investigated for money laundering. And that's been the trend. You look at any large incidents that have been reported for fraud, you'll also see some money laundering investigation happening alongside. But if I flip the product, and if I look at, these are the large ones, we all have been hearing about that. Manish spoke about maximum transactions going through UPI now. That's a different ball game altogether when it comes to that kind of product, when you see those kind of transactions. Do you see any challenges when when you look at products like UPI, pay-through accounts? The suspicious transaction monitoring becomes extremely challenging there. What is your view towards that, and how, sometimes it could be common modus operandi. So it could, I could have a situation where there's a fraud, there's a mule account used, there's a KYC fraud, and then money has been transferred. Suddenly it takes the shape of money laundering. How do you see that transition from fraud to AML? Do you really look at those things closely, and how is
Yeah.
your experience on that side?
Yeah, sure. Thanks, Vikram. Thanks, Sean. Yeah, good afternoon, all. Let's just divide the argument into two parts, right? And from the on the ground perspective of what's really happening from say fraud to AML and vice versa. So this is very simple. I mean, so fraud and AML are very clearly two sides of the same coin. So there is no doubt about it. So what is being fraud becomes AML, and what becomes AML actually feeds off into fraud again. So there is no question about it, and the question about coordination is really needed. Though there is a lot wanting to be done on the ground, but there is definitely a lot of need and coordination that is needed between the various siloed teams currently that is there across at least the Indian banks, so as to speak. MNC banks, because of their MNC culture and their processes are different. I'm just talking for the Indian banking sector because by and large I understand that it is pretty siloed, and it is siloed for a reason currently. It is siloed because the regulators basically for AML have their own way of monitoring money laundering, and fraud is more banks' own way to control customers being defrauded. So that's the perspective as to why it is siloed currently, and rightly so today. Okay, so that's the reason why probably the coordination is lacking. But needless to say that very close coordination is needed. That's one. Now coming to the trends as to what do we see from the UPI perspective, or from the large the front page AML frauds that we see, right? Also the AML ED investigation of all these loan frauds, loan app frauds perspective, and how do we basically see those trends happen. So largely, again, there are two trends that we see here. The first trend is the trend of pay-through accounts / mule accounts. Pay-through is for these large corporate accounts being opened and money being flushed through. And I would talk for S Bank's perspective. I would easily say 25-30% of whatever categories I find as money laundering goes through these pay-through accounts. The next largest, or in my pecking order, the next highest is going to be these mule accounts. Mule accounts example is I basically work for a proprietor, a small company, proprietorship-owned company. I'm a salaried person there. The proprietor, basically misuses my salaried account to flush through his own funds to be routed through for various purposes. Example, I need demand for high black money. So I basically use my salaried personnel to actually flush these money, and I withdraw cash through him and use it for my black money purpose. And the black could change to white and white could change to black, vice versa. So these are the two large trends that we see currently. And the second aspect of the UPI which you mentioned, so that's actually playing havoc currently. So the problem that we see as the Indian private banking sector currently is I have say these aggregator accounts, the payment aggregator accounts. Fintech is actually booming, right? So these fintech, example, all these these fintechs which open these merchant accounts, right, gets parked into these fintech accounts, into these payment aggregators bank account. So as a banker, we would not know who's actually sending the money through. For example, I go to a portal, I actually go to an online application, and I order my food through a marketplace from a restaurant through a marketplace. So as a customer, I go order through the marketplace to a restaurant. So there is actually a layer which is being created by design into this thing. So layering happens in this industry by design. So unless banks work with each other, unless the fintechs cooperate with each other, these insights cannot be shared with one amongst the other. And unless insights of who actually is spending the money is shared, there is no way that you can actually find out where actually the end use is happening. So there is a huge need for technological intervention. So technological intervention, like Sean said, is the need of the hour. Probably it's already there. It is for the banks to actually embrace it and make sure that the insights are being shared across one another. So that's my
No, absolutely, Ganesh, and thanks so much. I think very important inputs. Like we first discussed, how important it is to look at the dialogue or the interaction between a fraud monitoring team versus a money laundering team. They cannot be looked into as silos. I think that's clearly the expectation going forward. But like you said, the trends around UPI, trends around pay-through accounts, and the way money mules are being exploited, that is something which is a core activity. But I think the biggest takeaway I thought was, how do you really bring the entire ecosystem together? Because how banking, sometimes it's about who's more responsible. Is it the banks who are having the transaction, the account, more responsible than the fintech who's actually allowing the pass-through to happen? Who's supposed to monitor? What is the end responsibility? Sometimes it gets lost between the overall activity, and we've seen that more often. So I think what you really mentioned is, how do we integrate, how do we collaborate more in the ecosystem to bring these things together? And clearly technology will play a key role, in this. I think the kind of conversations we had right now, Manish, you, Sean, and Ganesh, I think one common aspect I'm really looking at is, it's not just about one dimension. It's not just about how we can get more technology, gain better technology, or how we can get more awareness. I think it's about people, process, technology all coming in together. So maybe that makes me move to the segment on where I would like each of you to share your opinions. That if you want to bring about a change, today in how do you really monitor frauds and threats, what kind of changes you want to bring in, and if you can cover all the three dimensions, people, process, technology, that'll be a good way to go ahead. Yeah.
So thanks, Vikram. I think this is a very, very important item. People, process, technology. Okay. The last point which you told, okay, that who to be responsible and the responsibility is getting confused. If you ask me, my personal view is that the banks have to assume this responsibility. At the end of the day, money is going through the bank. Okay. Whether it is a wallet or it's any app or etc., etc. At the end of the day, it's a bank. They are into the fulcrum of the transfer for the money. So they have to be responsible. Okay. When you come to the process, I think that is an operational efficiency which is going to play a key role. When we talk about the various, common accounts or whatever we call, whichever name we give, it is important that at the time of onboarding, the right approach and right philosophy is applied. Why do we need not to give the common TIDs? We need to have the specific TIDs to the specific people, specific sets of merchant. Okay, that's a very, very important item. And trust me, it's a very old saying that bad days are called in a good days. Okay, or a bad loans are written on a good time. So when there is a boom, it's the best time then that we can bring in these operational control. Okay. Coming on to the larger framework, I think Sean also touched upon is that there is a technology in place. That's not the point. That's not the problem. You look for a one technology option, you will find 100. Okay. What is the design that we have as an institution? Okay. And something on which we have been working on continuously, and a lot of work still has to go, is that this entire architecture have to be first bifurcated into two fundamental, structure. When you talk about the fraud risk perspective or a financial crime perspective, one, anything and everything has to have an authentication journey and an authorization journey. Okay, that's very, very important. So any solution that we look at it, we have to bifurcate that what is that it is going to serve me. Any journey at our space or at our workflow or all the products that we offer, we have to view it from this lens. Is there any place where we do not have any of them? Because one of them will be there. But the question is, how do I ensure that each and every journey has both of them? Okay. Then you can have various technology. You can have a behavioral biometrics, you know, device authentication, IP authentication, various other techniques for an authentication. At an authorization, like you can definitely look at the velocity, you can look at the profile of the customer, the trend line, etc., etc. Then that becomes a very you know, I would say you will get a lot of books from where you can. But it is very important that these two steps are followed for each and every workflow. That's point number one. Point number two, which becomes, as we are talking about a technology, we are missing people. Okay. At the end of the day, it's the people who bring in the operational efficiency. Okay. How do you apply these thoughts? And that is where I think institutions have to invest, you know, in the human resources as well. Okay. And the right kind of, and there is a lot of caliber, trust me. Okay. It's a question of how strong we personally believe to institutionalize. Okay. So we personally believe that these are the two things that we need to do, and then things will fall in place. The other item, as I discussed earlier, and and so third very important item when you institute the first two items is, and this I speak and tell to everybody, that we need to have a quantification criteria, and the criteria has to be very simple, and quite criteria has to be only simple three. I need to have a highest bad capture, lowest false positive, and the speed should not be compromised. So these are the three criteria on which any solution has to be evaluated and instituted.
Absolutely, Manish. Thanks for that. So authentication, authorization, like you said, critical. Investment in people, trainings is critical, and clearly quantifying, the way. And I would agree, in many cases I've seen where when banks are looking at new technologies, the kind of implementations that are done today, giving so many false positives, that's not really the most efficient, way of really looking at it. And I think then you spend more time,
Correct.
investments, efforts in resolving that more often. So yeah, thanks for bringing that up. But Sean, maybe, going back to you, and I think that is one important problem statement we've seen in many banks. So firstly, change that you were talking about, maybe I want to hear from you from that, and maybe one specific thing on how do we look at this problem of, false positives, transactional volumes. How do you see that getting resolved?
There's two key areas I want to touch in on, but before I start, I just want to acknowledge, this is an incredibly immature domain in banking. Fraud's been around for a while, but the world of financial crime prevention hasn't been around that long. It's only been a few decades. I remember back when I was working in Europe, less than 15 years ago, when one of the first EU acts for customer screening was put through, the third EU Act for AML. That's when, unfortunately that happened post that, really sad events in September a few years back. Sanction screening was not at the forefront of organizations' minds. AML transaction monitoring was the small team hidden in the corner. I can guarantee you the C-suite didn't know anybody there. Right now, I can guarantee you the C-suite know every single individual leader across the AML transaction monitoring team, every single person involved in sanction screening, every single person involved across the entire financial crime network, and that includes fraud. 6 years ago, it wasn't like that. Indeed, 3 or 4 years ago, it wasn't like that. There are two ways we can improve this domain. First and foremost, and Manish, you touched on it, is people. Because this is an incredibly immature domain, there is a lack of highly skilled people who truly understand the domain. And this is a real challenge. This is a global challenge, not just here in India, not just in Australia, not just in the US. This is a global challenge. Because it's a new domain, people are just getting used to the historical context of what's involved. Why do we have separate silo systems? Because we didn't need to bring it together because regulation didn't ask for it. Why did we have batch-based processes for the CDD process? Well, it's because technology only allowed to do a batch, and the regulator said to the banks, how far can you push it? And he said, we need to do an overnight batch. Okay, that's why the regulation is like it. So People is probably the most important part of the entire organization. Training people and having trust-based partnerships. This is incredible. The days of having a vendor is long gone. It's the days of having a partner you can truly trust, somebody that's going to be with you day in, day out. When the going gets bad, because believe me, you know, these transformation programs, they're challenging. And they're challenging because of the people structure, and you want to be able to have a proper trust-based relationship. But the other key element I want to land with this, and if there was one area that I would like all of you to leave, and it's the importance of your information quality. Data is at the core of all of this. Being able to uniquely identify an individual all the way through is down to information. Being able to monitor the customer behavior is down to information. Be able to use the latest and greatest in data science techniques, artificial intelligence, is down to information. There's no point in having the best data science studio team of PhDs if you've got poor quality information. It's incredibly important to focus in on that.
No, I think that's very, very critical point, Sean, because I think we do talk about, you know, technology, AI, money, you know, the kind of ML techniques that are being used today, and, you know, a lot of banks get mesmerized, you know, with these kind of features. But you rightly said, if you don't have the right quality of data information that you're really looking at, and again, you know, getting in data scientists to really look at the way your behavioral pattern analysis can be, you know, looked at from a red flag perspective. If you don't have the right set of data quality or data information with the right set of quality, all of this goes into.
So let's touch on a real world problem that's at the core of what we do, and we're very passionate about this, and it's a personal passion of my own: financial inclusion.
Yeah.
Okay. Now, financial inclusion is about getting onto the economic ladder for all fantastic reasons. Okay? No identity, no information. Can't get on the ladder because they can't get a credit portfolio. Can't open up a bank account because they don't have an identity to start with. Now, if we are able to bring in all the available information that's in your internal ecosystem, say, okay, well, they're not a customer, so they haven't been here, they don't have a bad track record, they don't exist. But bring in all the information from other platforms, from social media platforms, taking in considerations of data privacy and so on. Taking in all of that unstructured information, there's a wealth of information out there, and bring in the behavioral biometrics data from the application. Bring all of that in at the start. You can start bringing up a profile of the person, manage that risk in real time to ensure that they're not a mule, to ensure that they're not fraudsters, they're just a genuine human being who's trying to have a better life to get onto the financial ladder.
Absolutely. No, if I read into the conversation, you know, and the problems, and link it back to the problem statement of having, say, higher false positives, I think it's about what kind of data I really have. Secondly, what kind of data do I really gather, which is structured and unstructured both, like you said. And then looking at behavioral biometrics in a way from the application standpoint. So that could really enrich some of the information I have, and that could really help in reducing some of the false positives. If I read
and continuously monitor in real time.
Yes.
We're talking in milliseconds here. Again, because the technology can do that today. Bring all of this information together and monitor it in real time.
Sure.
You manage risk in real time, you can actually do greater things. You can take more risk. The more control you have of risk in real time, the more risk you can take.
Well, thanks so much, Sean, for that valuable inputs. Ganesh, over to you. Like I said, you know, 3 dimensions. What kind of change do you think banks should expect now in India as a way forward?
Yeah. So the challenges that so basically the challenges we face drive these changes, right? So the challenges. So currently the list is looking like endless. So there is like a list of endless challenges that banks face, because the context, like Sean mentioned, is completely changing. What we saw 3 years ago is changed now. What we saw 10 years ago is changed now. What we saw last year is changing now. From a market perspective, the way money launderers change their modalities, the typology is changing. So we'll have to actually catch up on that. So that's one which is happening. The challenges internally the banks face in terms of the dependencies we have. So in terms of the people challenges we have, in terms of technological challenges we have, in terms of convincing a top management to actually provide budget. So there are like so the list is endless. I just probably share what we did in the past year or so for practical changes that we did past 1 year. Could be some examples that people can take away. One from a so I'll do it from an order of process, people, and technology. I mean, that's the easier order. I thought we actually did things. Technology is a little harder for us to crack for some reason, right? So from a process perspective, what we simply did was, see, process change is the simplest that you can actually tackle. It's about a reduced pendency. These can be reduced by creating some very strict tags or people responding to you, and the way you ask information should also be very clear. Just have simple formats so that people know what you're asking for. Say, for example, if I need to do an enhanced due diligence about a particular customer because I find it suspicious, the clarity of information that I seek should be clear. That's one. And the response tag that my branch should actually come back to me should also be very clearly followed. That's a very simple thing that we have done, and it's yielding results. So that's one process change example that we did. From people side, what we have been doing in the past 2-3 months is extensive training about about your EDDs and CDDs that the branch should do, and how the AML team needs to interact with branch. So that's been happening. As we speak, we're having weekly trainings for branch. We have a very strong branch network in India, so we have got weekly trainings to build capabilities at the branch level. To make them understand the meaning of pay-through accounts, because pay-through accounts I understand it really well. My team understands really well. The branch who actually onboards these pay-through accounts, wherein crores of money is being flushed through, right? It just clearly means that the branch does not even understand why they are onboarding that particular customer when they are not supposed to onboard that particular customer, despite having done a KYC. So that's the people aspect, the training aspect. Technology is like a wide game, which is actually which is open, starting from KYC, starting from false positive, interaction between teams, interaction between banks, interaction between the regulators and banks. So it's like a wide open space which is there. So it's like one step at a time. So currently we're looking at internally to see how fast I can do things. Simple things like false positive, simple things like I have an AML system. How mature is the system is something that we are currently looking at.
So thanks, Ganesh. Yeah, sure.
Just on that, because you mentioned an important factor that we haven't really touched on, is the regulator. So previously the regulator wasn't that concerned about fraud with the amount of scams that are going on. It's a global issue. It's a regulatory issue. What we're finding is that the regulators, the most progressive regulators, are far more open actually to sit down and understand what's the capability from a technology perspective out there. Because again, why was the regulation in a certain way 4 or 5 years ago was because that's all the technology could do, and the banks pleaded with them, guys, I can't have 10,000 people punching through these alerts every single week. It's going to kill us.
Right.
So now what's happening, we're having very, very progressive conversations with regulators globally. And in Asia, I find them to be far more progressive than elsewhere.
I would agree. Yeah.
It's great. So by understanding what's the art of the possible, we can actually do the impossible.
No, absolutely. Thanks for that. Thanks, Ganesh, for your thoughts. Maybe we just have enough time and for a couple of questions from the audience here. I'm just mindful of the time as well, but we can take a couple of questions if there are any. Any questions? Yeah.
Hello.
Yes.
Good afternoon. It was a very fine discussion about the fraud and AML sector. Myself, Sanjeev Misra from Indian Post Payment Bank. My question is that everyone is talking about the UPI and the scale of the transactions happening in a UPI. And we all aware how kind of the transactions happening in UPI. So can you throw a light or guess how much transactions under UPI that circular transactions, like you said, for AML, for pay through or money mule?
Ganesh, you want to take that?
Yeah. So the transactions that personally speaking from S Bank's perspective, we are looking at transactions which are 100 million plus in a month. So that's the magnitude that you are talking about, which means, the way Manish mentioned, if banks were to basically do this monitoring, you can imagine the amount of alert that it's going to generate, and imagine the amount of so imagine the amount of control that one has to basically put in place. So it's imperative that we all work together. So it just cannot be done by a single entity because of the humongous volumes of transaction that just flows through. I mean, it's 100 million plus just in a month for a single bank. So you can imagine the multitudes.
Now, I won't touch on India specific, but on similar vein, what we're seeing happening as well globally is regulators are starting to look at not just monitoring your domestic or your international payments for sanctions, and not just monitoring financial transactions and cash transactions for your suspicious transaction reports or suspicious activity reports. Domestic sanction screening is coming, right? Can you imagine trying to screen every single domestic sanction for screening? It's off the charts. Absolutely off the charts. We're talking about, in India, having to have teams of maybe 50 to 100,000 people managing alerts because the quality information's not there.
Yeah.
The only true way you can do that is start bringing this holistic capability together by bringing all of this information that we spoke about across the full customer life cycle together. When you do that, you can start solving these problems. It's already happening in some countries in Asia.
I'm sure, yeah. Any other question we have? Maybe we can take one more. Sure.
Hi, this is Shirish from FinCrime. My question to both the bankers on the panel is, what are the specific skills that you see lacking in your fraud monitoring teams or in your AML analyst teams, and how are you sorting that out?
Thanks, Sirish, for asking. Manish, you want to go first?
Okay. Hi, Siris. Thank you. So I won't say it's lacking. Okay. I think it's about the institutional willingness, how you want to institute this. Okay. Because please understand, if you want to bring in any challenge or any change, it is very important that it has to come from a bottoms up. Okay. So acceptance. So what actually happens, and this is the philosophy which we are having for last 25 years. Okay. Are you going to chase the numbers, or you're going to ensure that the right numbers only come in? If you have that philosophy in place, okay, things will fall in place. Then the individual is only an incidental, sorry for using this phrase, because you need to have that philosophy in place, that which way you want to run it. Because no individual is less intelligent, trust me. It has to be driven from the top. And sorry, if I may add the one point which my fellow colleague from the Indian Payments Bank mentioned it, I would only want to say, though I don't handle that particular piece, but these things cannot be, whether it's in UPI or any other business, okay, or any other payment pattern, it cannot be tracked in form of any percentages or a BIPs. It will be far, far, far lower. So trust me. So the benefits that you will weigh against the problem that you will have will be far lesser. Idea is, how do we ensure collectively that even that smaller number is also reduced to zero?
Yeah. So a view which is complementing to what Manish is saying is, currently, skills are there. We are managing it well. It's going on. But when we look at the future, the way things are going to pan out with the UPI boom that's happening, the payment space which is booming, I think we need skill sets across the three fronts. People, they need to be trained about these financial crime aspects across the bank. And I mean, people, it's not just the AML and financial crime team, it's actually the front force, there is on the field, top management across. That's one. I need also people who understand these technology to actually implement them. So that's, something that we'll have to build. I need people who will be ambassadors for process change also, who will actually, implement these change initiatives. So for financial crime specifically, because it's not like a normal process change. I have a projects guy come and do process re-engineering. It's not that we're talking about. It's about understanding, AML, financial crime space. Accordingly, have those skill sets built in. I think there is a huge demand, so as to speak, in the market. That's why you see a lot of attrition happening in the market currently. The attrition across the banking sector, across the financial services sector is actually, pretty high, fueled by, all these, great resignation which is, happened currently. So yeah, while we are, doing okay for the minute, but I think the moment you take your eyes off, it's just going to be a big challenge. That's true, Shirish.
Thanks, Ganesh. And with that, I think we would like to conclude the session. Thank you so much to all the panelists for taking the time, and thank you so much the audience for really being here and being part of this most important and very enriching conversation on fraud threats. So thank you so much. Thank you.
Thanks
Thank
very-
you, everybody.
I'm
Thanks.
coming back for the silent disco.
Yeah.
Thank you.